How do the Fed's mistakes affect the crypto market? Will miners continue to capitulate? Are exchanges reducing their Bitcoin balance? Do you know what Z-score is? What about cumulative deltas? We'll tell you everything you need to know here on Mundo Crypto. Welcome. Inflation seems to be in control of the battle against institutions, while a recession seems to be just around the corner. Hold on tight, it's going to be a bumpy ride. Let's kick off with the technical analysis. In the weekly time frame, we can see how in the week starting June 12th, a bearish-like candlestick formed, which was a sign of a continuation as it lost the important support zone located roughly between $27,000 and $29,000. Last week, between June 13th and 19th, a nearly full-bodied bearish candlestick formed. In this case, it broke two supports with no hesitation until reaching an incredibly important zone at $17,500, which converged with 0.78 Fibonacci. After testing this area, the price bounced back and managed to stabilize the fall between $21,300 and $19,600. If we take a look at this week's candlestick, which started forming on June 20th and will come to a close on 26th, we can see how indecision is quite present in the market due to its classic doji candlestick. This is obviously subject to change given the week hasn't ended just yet. If we display the moving averages, we can see how the price has gone on to cross the 200-period moving average. What's important about this movement is that after testing the $17,500 zone, the price has gone on to absorb part of this fall and close in on the 20,500 zone. This week's candlestick remains below the 200-period moving average, so we should keep a close eye to see whether it recovers that average with a bullish movement or remains below it. In this daily chart, we can see in more detail how the price drop has cascaded. As mentioned in our previous analysis on June 16th, we saw a full-bodied bearish engulfing candlestick with volume input, which hinted that it would go on to test the zone between $17,600 and $19,000. The fractality mentioned last week did end up taking place in the zone between $20,000 and $21,000, where it could have potentially halted its movement, but several fundamental factors led its price below the range. Later in the video, we'll be discussing the fundamental developments that have impacted Bitcoin's price, so be sure to stay until the end of the video. Now, going back to the chart, the candlestick on June 18th displayed significant volume input. The price was about to approach the $17,600 area, but it bounced back and touched the $19,000 zone. On June 19th, it also headed towards the support zone at $17,600, but its movement was absorbed, forming a new spike in the lower part of the candlestick and closing at around $20,500. From that moment until today, June 24th, the price has been creating a type of range between the support and resistance. The price has started lateralizing in the zone with a possibility of forming an accumulative pattern, but it is not yet set in stone. Fundamental factors that could arise in regards to Bitcoin will determine whether an accumulative pattern forms or, on the flip side, a distributive pattern forms. As mentioned, if we display the moving averages, we can see how these candlesticks continue to head towards the downside. But we can also see how the price is found in an important oversold zone in the RSI, where evident divergences are in the oscillator compound. In other words, there are many signs of buying and selling interest. So if the price were to experience a boost, it would have to surpass the resistance located between roughly $21,400 and $22,600. On the other hand, if the price is unable to break the aforementioned resistance, we could see a slight lateralization. And if it cannot support this area either, the price would then retest the lower part of the support located above $17,600. Worst case scenario, if the price is unable to maintain that area in the event of a fall, it would go on to test a new range in which the $14,000 area acts as a support. Now it's time to take a look at how traditional markets have been doing by analyzing the SP 500 index's latest movements. This chart displays the opening and closing of the market. Here we can see how, when losing the zone between 3,790 and 3,840 points, it went on to test the $3,640 zone. After this, it bounced back and headed towards the zone mentioned previously, an important resistance zone that converges with 0.38 Fibonacci. If it manages to surpass the resistance, it could then head towards the 3,900 point zone and even the superior part of the uptrend at roughly $3,950. On the contrary, it could once again drop until reaching the support between 3,630 and 3,710 points approximately. Now let's analyze an extremely relevant factor surrounding global economic movements, the price of oil. In this daily chart, we can see how the price of oil has dropped. On June 22nd, the price fall was caused by the president of the Fed, Jerome Powell's words. Stay until the end to find out what he said. More on this chart, we can see a structure with a clear upward trend. But the difference between the previous fall is that there's been a setback that has made it lose the 50-period moving average and above all, that of 100, placing its price at $104 per barrel WTI, which is North America's benchmark for oil pricing. We will now have to wait and see whether the price manages to recover from this fall or on the contrary, whether it pulls back and surpasses the uptrend line. If it succeeds, it would then trigger a possible double top pattern to continue its move towards the downside. Now, let's move on to the fundamental analysis. Here, as you know, we'll be looking into the most relevant news stories in the cryptocurrency and macroeconomic field, which have a direct impact on the price of cryptocurrencies. Inflation continues to ruffle world's leaders' feathers. In the Eurozone, the European Central Bank has decided to take serious action to stop it. The CPI, which measures the change in the price of goods and services from the consumer's perspective, stands at 8.1%, a record figure on the continent. As a result, the European Economic Regulator confirmed the rate hike of 25 basis points in July and another one in September, which could be higher. This is the first rise in the last 11 years and is accompanied by the end of net purchases of central bank bonds. On the horizon, the recession is getting closer and closer. The Vice President of the European Central Bank, Luis de Guindos, has confirmed this.
Vamos a ver, nuestro escenario central, lo vuelvo a repetir, nuestras proyecciones de crecimiento son de crecimiento positivo por encima del 2% tanto en el año 22 como en el año 23, con unas proyecciones, con unas hipótesis mucho menos optimistas, que no son optimistas las del escenario central, pues entonces se te puede producir una situación de crecimiento, de tasa de crecimiento negativa en el año 23.
But the fundamental macroeconomic factors do not only revolve around the Eurozone. In the United States, the battle against inflation is also in full swing. American CPI data made public on June 10th has proved that the measures adopted by the Fed have not achieved the desired outcome. This is quite clear considering it is the worst inflation data seen over the last 40 years. For this reason, an interest rate rise of 75 basis points has been carried out instead of that of 50, displaying the Fed's aggressive approach. In addition, Federal Open Market Committee's economic projections have worsened both this year and the following year. If we compare them with those published in March, the GDP growth projection is 1.1% lower and interest rates are expected to sit at 3.4% this year, a figure higher than that issued in March. As if this were not enough, the president of the Fed, Jerome Powell, testified before Congress on both Wednesday, June 22nd and Thursday, June 23rd, to present the semi-annual monetary policy report. According to him, the US economy is strong enough and can withstand a tougher monetary policy, in which interest rates continue to rise. But these measures hint at the high probability of a recession. Powell himself admitted that the rate hike could be the cause of a possible recession, with bottlenecks in the supply chain or the prices of energy and raw materials as main allies. But the president of the Fed insists on taking control of inflation by increasing basis points. He must be very careful with this though, because what Democratic Senator Elizabeth Warren suggested may very well occur.
I want to say, you know what's worse than high inflation and low unemployment? It's high inflation and a recession with millions of people out of work. And I hope you'll reconsider that as you drive this, before you drive this economy off a cliff. Thank you, Mr. Chairman.
At least Powell has taken a step forward by admitting that inflation has not only been the cause of the war in Ukraine.
Given how inflation has escalated over the past 18 months, Would you say that the war in Ukraine is the primary driver of inflation in America?
No, inflation was high before, certainly before the war in Ukraine broke out.
If inflation was already through the roof prior to the war, there must be an explanation, right? Indeed there is. The United States decided to deal with the pandemic by printing money. If we carry out a comparison, the USA spent the equivalent of Japan's GDP. On a global level, it was close to 6% of the world's GDP. Even looking back at the last economic crisis, budget measures during the pandemic are 4 times larger than in 2008. Perhaps Jerome Powell has seen this data and realized that it wasn't exactly the best approach. And due to this, on June 23rd, the data around new unemployment benefit requests in the United States revealed that the outcome was negative. This measure is used to determine the number of unemployed individuals in order to request economic benefits. This data is published every 7 days, and for the 3rd consecutive week, forecasts haven't been met. The data was expected to drop to 227,000 people, but instead sits at 229,000. Although the differences are minimal, these results are a sign that the labor market's health in the United States could decline in a recessionary environment. In today's Onchain Analysis, we'll be discussing UTXOs. What exactly is this? Well, it is one of the main concepts surrounding Bitcoin's operation, amongst others. This basically helps to prevent double spending on this cryptocurrency, as well as counting Bitcoins in circulation. Through this, we can confirm that Bitcoins are equal to the unspent transaction output. This chart displays the percentage of UTXOs in profit. In it, we can see that following the corrections experienced by the market, 73.8% are still in profit. In other words, we found a very significant change in how they affect Bitcoin holders. This means that these cycles have less of an effect on the amount of Bitcoins that are in profit. Now, let's move on to Z-score or MVRVZ. This data displays relevant oversold or overbought zones. Technically, it is the number of standard deviations above or below the mean. In other words, how much separation exists between the realized value and the market value. And in this chart, we can see how the price of Bitcoin is sitting in an oversold zone, which is why the price is considered underrated. Here, we can see the number of Bitcoins that are transferred from accounts associated with miners to exchanges. We can see that it is one of the fundamental factors that has influenced the correction continuation. The numerous miner transactions demonstrate what we discussed in our previous analysis, the capitulation of investors and miners. You can watch this video right here. This chart also displays how the least profitable equipment has been turned off and the miners have made large sales during the month of June. Despite this, we must keep in mind that the balance of Bitcoin on exchanges continues to decline, with a large outflow of exchanges from June 14th. This reduction can be taken as a positive sign, given we could be facing a price construction and holder distribution phase. On the other hand, the investment funds got rid of a large number of Bitcoins, dropping from 858,000 Bitcoin to 833. This sale is quite significant, which doesn't favor the price of Bitcoin, but it has not affected the exit of this cryptocurrency to the previously mentioned balance of exchanges. As we can see in this heat map of daily purchase orders, on the 18th, the price of Bitcoin was looking for the liquidity zone located at roughly $17,600, where the most relevant cluster was located. On the 19th, it tested that area once again, but the price shot up and has recently been oscillating between the buy orders located between $19,000 and $20,000 and the sell orders between $21,000 and $22,000. Now, let's take a look at another heat map. We can see how these orders are in motion. This is due to cumulative deltas of the last candlesticks being more accentuated by purchases than by sales, oscillating the price in very relevant areas of the order books. But what are cumulative deltas? Simply put, a delta is the difference between the buy and sell volumes within a period or candlestick. Specifically, an accumulated delta reveals the overall dynamics of the balance of purchases and sales of the market within an exact period of time. Now here's a better view. Basically, since getting into the zone that we're in, the accumulated delta volume has headed towards the upside, both futures marked in blue and spot marked in green. This means that the buying volume is momentarily above the selling volume, but keep in mind that this is a short-term movement, so we must keep an eye on it. Finally, in derivative markets for futures trading, today, June 24th, a quarterly close has been carried out. In it, we can see how the price is below $21,000 and the maximum paying range for liquidity providers offering these contract options is $29,000. This means that the sellers will make more profit than buyers and liquidity providers will not win this time. In short, the macroeconomic measures to curb inflation do not seem to be living up to expectations, and the aggressive policy imposed by central banks may end up leading to a recession. Given this scenario, all markets are in prep mode, and cryptocurrencies are no exception. That said, Bitcoin's on-chain data is not all that negative. What about you? Do you think the crypto market will remain in a bearish phase? Will inflation be curbed? Are we on the verge of a recession? Let us know in the comment section below.